Greetings, Dr. Jeffrey Scott here. This is my pre-market stock market consult for Thursday, September 25th, 2025. Well, this has been a different week. Markets have had a lot of volatility. We've had several down days in a row. And the question really is this the beginning of the end of this pullback? And are we going to go higher, or are we facing a bigger leg down? All we can say is today the markets rallied off of the opening losses and ended up with DOJI sitting on the first line of support. Again, my name is Jeffrey Scott, market MRI Pro at gmail.com, Google Group Top Down Trader. Thanks for joining. If you're new to my channel, hit subscribe, hit the alarm. Thumbs up is always appreciated. If you don't like something, email me or put something in the reply so I can make it better for you. This is for educational purposes only. Anything we talk about should be considered in the spirit of education, not investment advice. The intent of the video is to demonstrate how I use my tools for top-down analysis. Trading involves risk. You alone are solely responsible for any investment decisions you make. I may own or intend to buy or sell any stock mentioned in this report. Trading stocks and options should be considered risky and should consult with your financial advisor before making trades. And as I mentioned earlier in the week, I have signed off on the MetaStock tools, and they'll be the next ones to come out. My Google Group's called Top Down Trader. Just go to Google Groups, go to all groups, look for Top Down Trader, let us know how you want to be contacted. Palm Beach Gardens is the site of my October 26th and 27th meeting. Just reach out to me, Jeffrey Scott at marketmripro at gmail.com. It's $12.50. That includes 2 days of education, 5 meals plus snacks all day on Sunday and Monday. We will do a pre-meeting closed session education program. So those that have not been to my events before don't have to worry about the vocabulary. And anybody that attends will get $400 to be used off of the any of the tools that I can control price. Right now, that's TradingView, TradeStation, and the app. That rebate means if you signed up for the meeting today and the program is just shy of $2,000, we use $2,000 for your first year and then $500 for follow-up years. If you sign up for the first year, you'll get $2,000 minus the $100 top-down trader group, because of course you'd sign up for that, plus $400 rebate, which gets it down to $1,500, and you don't have to wait until the meeting. Once you sign up, that rebate becomes active. And if you want double the fun, John Person has his training the Friday and Saturday. I'm Sunday and Monday. John's an incredible trader, educated friend of mine, owned a futures firm in the past, just been around forever, and he actually manages a lot of money these days. He puts out a great session as well. Know your news and earnings. So we've got the PCE coming tomorrow. Someone said the words PCE on CNBC today, and I don't think they were accurate. I think they were talking about something else. But the economic data was a little bit stronger than expected, and that led to a sell-off at the open and an increase in yield. Why? Because right now we're having to thread the needle between inflation and jobs. And if the economy is holding up and those jobs numbers hold up, then maybe the Fed has less of a reason to cut. And if the Fed has less of a reason to cut, then things seem to fall. And I think what's happening, and I heard it, I think it was Kramer, may have talked about it tonight. No, I don't usually listen to him, but I was in my car later than normal and was talking about, if I remember correctly, that there's two economies. There's the AI economy and everything non-AI economy, consumer-driven economy. And it's that latter one that's really lagging, and that the AI economy is keeping everything afloat. After hours tonight, Costco is down a little bit. Nothing else earth-shattering. I think there's a drug approved, but that stock was on hold. It's a judgment call to hold stocks over earnings dates. It's bad judgment to not know when your stock's earnings date is scheduled. For more information about my tools, again, Jeffrey Scott at marketmripro at gmail.com with any of your questions are fine. If you own the product and you have any technical support issues, coding at marketmripro. And let's go take a look at charts. not this one. Let's go to the daily briefing. So first thing is, it was a tough day. The VIX was was up 1.3. The dollar was up 0.69, and then the leading ETFs, Diamonds down 0.34, Q's 0.43, Spiders 0.46, and Russell 0.98. If I want to find something optimistic, is that all of them, except for the Diamonds, closed right up near the top of their daily trading range. So that's a positive. And Bitcoin was down again. Bitcoin over the last 5 trading days is down almost 7%. Pretty big move. On the NYSE and the NASDAQ, the 52 weeks, new highs minus new lows went negative on both of them. And that's always concerning. As I like to say, um, new highs in the market are not built on rising numbers or new lows on stocks. How bad was breadth today? You could see the top here is sectors in the index. The next one is industry groups, and they both were very negative and lower than they were the prior session. And if you look at the S&P 1500, how bad was it? Only 25% of stocks were up, 25% in the NASDAQ, and 27% in the NYSE. That's a pretty negative session. There's no way to put sugar on it, say anything positive about the day, except maybe how it ended. We'll take a look at that in a moment. What was leading? The only S&P 500 sector up was energy. Technology was just a little bit negative, followed by real estate. And the big losers were healthcare, discretionary materials, and staples. If you want to pick a theme, go mining, because it's silver, lithium, metals and mining, uranium. Here's gold. You had some social media and solar making it, and the Chinese discretionary, which I think some of these solars might fall into. So rough day on Wall Street. Nothing that you don't already know. Let's see if we can make it feel less bad. Here is this is the weekly. We'll just go start here with the weekly. Notice the bongos on the top are blue on all 4 of the major ETFs, Spiders, Qs, Diamonds, and Russell. That the price is above the WMA and all the weeklies. So everything is in a buy on the weekly and nothing's close to breaking down. On the other hand, when you look at the dailies, on the dailies, you could see that the WMA, which you'll just have to trust me for a minute, which kind of correlates well, the 30-period daily WMA and the 17-day simple moving average for whatever reason. But you could see the spider came back and tagged the WMA, and then a DOJI formed. Indecision day after a sell-off could be a place to expect the market to go higher. The Qs did not touch the WMA, but a bit of a bottoming tail. The diamonds closed just above the WMA, and the Russell closed just above the WMA. During the day, both the IWM and the diamonds went to a sell sign or a bearish posture. So we finished okay. I talked about lines in the sand. So let's go look at those index charts. We're going to start with that S&P 500. And I talked about that this was my logical target, and we bounced off of that target. Now, is that going to be enough? Have we had enough negative seasonality, or do we still go down a little further? From where we closed, which looks like it's in the neighborhood of 658, down to where that 50 is, which is in the neighborhood of 643, just another 2.5 or 3%. We could easily do that. On the other hand, this pattern of this bottoming tail, similar to over here, over here, over here, typically means that we're getting closer to the end of the pullback, or could mean that. So nothing is very broken there, although sure it was a rough day for many of you. The Qs did not quite get back there, but a nice bottoming tail. We look at the diamonds, the DOJI on the 17-day, and the Russell, really hoping that this isn't like the last new high and then reversal. A DOJI just about on the 17-day. So I put all this together. We've pulled back in an orderly fashion to the obvious place to expect a bounce. We're 2 to 3% away from the 50. If the 17 doesn't hold, then my conviction that we'll get a bounce at the 50 is pretty high. I don't think this market's in a major correction mode, and I don't expect it to go down hard. Now, things that could bother me or make me feel better about it is the VIX was up today. This is the VIX futures were up 3.5%, and they're moving higher. And so until they peak, it'll put pressure on the market. Now, the fact that they had such a big topping tail makes me feel a little bit better. And then the one that's got me a little nervous because I know Larry Kudlow likes a strong dollar policy, but a strong dollar can be a tax on the US markets too. Now, if you look at over a period of time, we're nowhere close to a high, but we broke out of this line here that we've been consolidating. So that's going to be something to continue watching. And that is the US dollar. Commodities, interesting day. The dollar was up, the markets were down, but gold and silver were up. Gold, sort of an inside bar day, but up 0.42%. Silver, much stronger looking session, closing right off the highs or at the highs, recent multi-year high. Silver was up 3% and closed at the highs of the session. That one's pretty darn impressive. If we look at oil, it's running into resistance here, did not break above it. Natural gas can't get above the 50. And then if you could see here, let's take a look at the 10-year and the 30-year. 10-year was up a tad, closed up 0.75%. And then the 30-year ran into the 200 and failed. And net, the 30-year was actually down today a little bit, 0.13. Remember, the Fed controls the short end of the yield curve. That is great for people buying a car. But if you're buying a house, it's the long end, which is more controlled by the bond market. If we look at the buckets, we're not quite at that scene in Braveheart where Mel Gibson is telling his horde of barbarians, hold, 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 because we're not ready to attack. But we're getting really close to saying that we're building up some extension to the downside that might make us expect a bounce. We've got 17% of the stocks in the NYSE, 21% in the 1500, 16% in the Russell 2000, and a little bit less, 8% of the NASDAQ are now below their lower Bollinger Bands. When you get into the 23, 25%, you sort of get a reversal signal. I've studied this over the years, and certainly in a uptrending market, when you get oversold by the buckets, you typically get a nice recovery. Maybe a day or two away. Market breadth, here's the NYSE. Here's your shooting star, obvious reversal candle. Closing here at the low of the day, I don't see anything that says it's going to reverse. You're a couple percent away from coming down here. And to me, that's the likely place that we bounce at. Now, hopefully we don't get all the way down there. But if we don't hold there or hold at the 50, if we break down from here on the other indices, that's not good. You could see down here stocks above the moving averages down a lot. We don't have the volume until later, and you can see new high, new lows, AD, events, decline lines, and up down volume are all negative. Over here, the NASDAQ at least reversed and closed higher than it opened. A little bit of a reversal looking pattern. Um, right now, the 200 is at about 215.7. We closed at 22,384. So a couple hundred away. But This is a big number there. So we're within striking distance of that 50 as well. And that's where I'm expecting my line in the sand to break down below that. And by that time, I'll be in a lot of cash. I do think it's not out of the question that we see a significant bounce in the market either tomorrow or Monday. And of course, if we don't see it on Monday, we're going to have people coming out over the weekend talking about a big market crash. It's that time of season, folks, so just to be prepared. From the ratio charts, I can still see strength in communications and technology, and look what's moving up right now. Energy's making a play, something that most of us probably are under positioned in our portfolios. Now, just like we worry about divergences telling us we're turning down, now we're going to start looking for divergences in the AD line, stocks above the moving averages, etc., pointing up while the market's weak. We don't see that. But if you look at where the 13 weeks are, 0.33, 0.36, 0.32, and 0.25, you could be a day or two away from that point you expect a reversal. So in my mind, I'm starting to see enough evidence that suggests to me the market may be getting close to a short-term bottom. Now remember, this is Jeffrey. Sometimes I feel like a perma bull, but think about it. The markets go up. I mean, you go back to the JAS layout and you go to the trading model, you go to monthly charts. Um, when do you want to be a bear in this? Sure, you can be a bear here and a bear here and and then buy at the bottom, but it's kind of hard for people to buy at the bottom. Um, this was the monthly candle where we said we hit a bottom and we started buying hand over foot. And we've had a pretty good return on the year. So long-term markets go higher. I think that we will go higher here, but the question is how much lower will we go before that happens? If we look at the JAS layout, and I had a great question today come in from one of the users. The JAS list includes the NYSE, the NASDAQ, and the Amex, pre-filtered each day for $1 minimum price and 100,000 shares. I want to eliminate things that I wouldn't own and things that are I wouldn't own on price or on volume. The rest of them are what they're described. Weeklies are about 500 stocks that have weeklies with decent volume. Then you have the Russell 1000, 2000, S&P 1500, and so on and so forth. The top line defines the list. When you go to the impulse list on the JAS, you've got 3,818 stocks today. It populates the radar screen, but it also populates the drop-down scans. Okay. If I was rather look at just the Russell 1000, it's going to switch the main list to the Russell 1000, and we'll know that because once it's loaded it, we're going to see 1,000 stocks over here. Give it a second, do its thing. Well, it's a little bit less than 1,000 because it's got that dollar and 100,000 shares, but I think there's some non-trading stocks in there. So now you have the Russell 1000 with all the signals. When I go to the top-down view, now if you look at what's in the sectors, it's the same stock. So what is up here at the top ultimately controls what shows up on the impulse list. And when you go to the top-down view, it's going to be the things that are in the impulse list. So let's put back our 3,800 and so. I think this was a nice touch that Praveen put in because I am an impatient fella and I keep hitting the same button, wondering why hasn't it changed? And the program doesn't like my repeated hitting the button. So now I know, don't hit the button because that blue line is still there. And in a second it will finish and then it'll populate the list. Now, right now, I see no point unless the market opens up and is still up after 10:30 tomorrow to start opening up new long positions in equities. I think that if the markets were to fall another 3%, we really haven't caused any damage to the uptrend, but your portfolio might be down 6, 10, 12%, and that is damage. So I'm not chasing things as they fall, but I am looking for a bounce. If not tomorrow, then in the beginning of the week. And I'm basing that on the 13-week new high, new low number, which has come down, the green line, as well as those buckets. Now, if we go into the top down and we look at the broader markets, energy led, followed by communication services and financial services. These are the different industry groups in those three sectors. And let's just take the top 10. Now, looks just like the themes did that I was talking about. So there's 199 stocks. The first thing I like to do, which may already be done, is to come in here and filter for anything less than 5 or 500,000, and that'll bring the list down to 101. So now, since these are the leaders, what would I do? Often I'll rank them by percentage move and start looking at them. That's not buyable, IPO. Interesting move. This is an old friend, LEU, one of the most volatile, hard to hold stocks I ever had. And it would have made a big help in my portfolio had I held on to it. But it's one of those scenarios where I had a decent amount of profits and then it just became too scary to hold. And I closed it at profits, but I left a lot of money, obviously, on the table. So LEU is a utility that is involved in the data. Well, it's related to utility, I thought. I don't know if it's related to the uranium, but it's got something to do with the nuclear energy delivery. Um, Pullback and a rebound. Don't you want to see that on the markets? I do. FT, don't know what that is. Flow Tech, um, pollution control, flow. Actually, not a bad looking chart. Big gap up here, probably on earnings. So let's look at that. So this would have been May 7th. And if we look up here, earnings came out May 6th. Look at the earnings per share growth of 240. Look at the surprise was massive. Growth and surprise on revenue. Had another big surprise here. Now we're going to see 15 cents versus 8, so almost 100%. And that's if it doesn't beat its number. It trades at a multiple of 23. I think this one looks really good here. I think that energy stocks have a lot of room to make up. Here's a nice pullback. We broke above the 50 and we look like we're breaking out here. So that's one that I like. Run is a solar stock. KGS, Kodiak Gas Services. Excuse me. PVF is a refiner. And one thing I like about refiners is most of them pay a dividend. This pays 3.91%. Ugly fundamentals. Fundamentals, though. Breaking out. Billy. Billy. Technology. A nice little flag and a breakout on decent volume. Tidewater Oil Services. This is a group that I think is getting ready to run up, pull back to the 50 and ready for a breakout. CVI is another refiner, I believe, pays an 8% dividend. AROC is oil services, breaking out. And XE, can't remember if it's services or exploration. Uranium, largest, okay. So it's another uranium play. And that's kind of what's been leading the market. And there's the big uranium stock, Cameco. Expensive. Let's look at the expensiveness, if that's a word, almost 100 on the PE, but massive grower. This has been the leader. What I've been playing because I missed, I've been playing energy fuels, and you can see it too has had a pretty nice move. So certainly one way of identifying stocks to buy is to filter for the leading stocks and the leading industry groups and take a look. Now, I don't always have patience for that, I'll be honest. I'm not a hyper trader where I'm taking 5 to 10 trades a night. I'm going to take, or the next morning, I'm going to take 1 or 2 a day. And I'm going to do a lot to manage my current portfolio. So let's take a look at the price and volume and let's bring in that 3 day or 2 day momentum. And let's take a look at these because this is my go-to scan to find potential candidates. PEPG, PepGen Healthcare, don't know what they do. Up 400% today. Almost by definition, I don't chase those things. I don't know dystrophy, even though I'm a physician. Sounds like they have some interesting data and enough to move the stock. Well, that could be a story in itself. Um, the next one's SGML. So lithium of the Americas was up a lot the last 2 days. You know, more and more discussion about how lithium is going to become or has become a, what's the word they're using? It's one of those things that is necessary for the government. And there was an investment in Lithium of America, and I think it's going to goose all the lithium stocks. A lot of them are cheap stocks like this one, and you could see it had a nice move. And what we're really scanning for here are these 2 dots that are above the squeeze area. I'm looking to see if that green line's going up, the relative strength versus the OBV, versus the moving average, relative strength versus the spider with going up over the moving average, and the OBV's going up. That one looks interesting. I don't like buying below the 200. And then we have Dairy Queen, or also known as Drillquip, or now DACO New Energy Corp. It's gone from a services stock to now it's a solar company, a new company. Ticker was reused. It was sold. Up, pull back, up, pull back, up. I just don't know how much higher it goes before it pulls back, but I like the pattern a lot. Um, and you could see the 2 dots there. So that's some stocks to look at. I want to be careful. I don't want to be a cheerleader tonight because I just not in a cheerleader mood when it comes to the market. And as we did last night, you could pretty simple look at the contras. And they're not. Oh, that's why? If you know something's supposed to be there and you don't see it, you got it filtered too hard. So this one goes up when the diamond goes down. So you've got a new doji, not giving us a signal. Dust will go up when gold goes down. Stocks will go up when the semiconductors go down. SPXL is new to the family. You're in a little leg up. This thing could go up massively if the market falls down. SQQQ will go up if the Qs fall down, and the TZA will go up if the Russell is down. Now, I don't think we have a buy signal on any of these, although they're all starting to move, at least the ones that are short the indexes. If we open lower and continue trade lowering tomorrow, I'll probably liquidate more positions, raise cash, and maybe put on some protection with some of the ultra ETFs like we just looked at. I will tell you, I'm a lot better at buying stocks than buying contra ETFs, and usually they're gonna expire worthless. So on that note, have a great day. Be careful. I think we are getting to or close to a place to expect a bounce. It might be a short-term bounce. It might be the bounce. Who knows what kind of a bounce? But until I see that, I'm going to be very careful to the long side. Enjoy your weekend. I'll be out in San Francisco at the IBD, formerly known as IBD Growth Stock meetup with some really great traders, and I hope I'll have some good information for my weekend video. It's probably going to be late this week because I'm traveling. Thanks, everybody, and thank you so much for all your support.